I want to talk about Expedia for a second. We're talking about weakness in the travel sector, but in all fairness, for the current quarter, they guided to 3 to 5% bookings growth. So it may be slowing down, but is that in your mind a sign of trouble just to continue to see growth?
Well, I think it's less about the results and more about what they said after the fact, Frank. And for us, it really points to really a narrative we've been seeing this entire earnings season is that the consumer is clearly slowing down. And at this point, I think you need to be cautious on stocks that are exposed to the consumer. If you look at what we've been seeing with inflation, inflation starts to come down, margins start to get squeezed, right? And that's what we're seeing across the board. And I think with those consumer stocks, you really need to be cautious at this point in the game.
All right, so you want to be cautious with the stocks, but Bill, I want to come over to you about the reality of the actual economy. I'm just going back to the jobs report just a few days ago. Seems like it was forever ago, but it was really just a few days ago. Unemployment at 4.3%, that's pretty much normal. And then you see wage gains above 3%, actually above 3.5%. That seems to me that if you look at this picture, it's a snapshot. It's also backwards looking in all fairness, but it seems like that the consumer would be in okay shape.
You would think so, but right now the consumer is really spending way higher than the growth in income. And as a result, the consumers are having to deplete their savings. And the only people with savings are really the rich people. The stock market wealth that they generated with the rise in the stock market has really helped a lot of people, but those tend to be the rich people. And the poor people are having to go to second jobs and third jobs in order to make ends meet and dip into their credit cards.
So, Tim, coming back over to you. I mean, Bill's hitting on something we've talked about a lot here on CNBC, just this divergence between wealthier consumers and middle-income consumers and lower-income consumers. So you were mentioning that you have to have some concerns about consumer-facing stocks, particularly in travel. Are there certain stocks that you think in this travel area that may be immune to some of these downturns, or at least they get more of a percentage of their revenue from these higher-income people?
Well, I think it's tough to say, Frank, and quite frankly, I think it's an area that we're cautious on altogether right now. I think there's better opportunities out there, and really what we're focused on is pockets of the market that are not as exposed to this consumer slowdown, and specifically pockets where we're not going to see a big hit to demand, even if the economy slows. So think about things like AI infrastructure plays. This is not an area where I think you're going to see a lot of companies slowing down spending. Other pockets of the market like defense, again, not an area where you're going to see a slowdown should the economy slow. And for us, it's really about where we're at in this cycle right now. This is not a mid-cycle slowdown. We're coming to the end of the Fed cycle. This is always a time where we see earnings back up, and we need to be cautious and now focus on those companies where you're not going to see them as exposed to an economic slowdown.
So, Bill, coming back over to you. I mean, you've been around for a while. You've seen just about everything that can happen. Have you ever seen a situation like this where the consumer continues to spend, even though that they're pretty much stressed, they're facing these higher interest rates, credit card levels are at historic rates right now? Have you ever seen something like this before? And if so, how did that play out? Because I think a lot of us are trying to figure out how this is going to play out.
This trend doesn't end well when it's stretched out like that, and the only people who have discretionary spending are the people who have a lot of wealth. But one of the things that we have to keep in mind is that it's absolutely true that these non-consumer areas, the AI and things that enhance people's productivity, that's how you raise wages, and that's how you raise productivity to the point where people can afford to do things better now. AI, I think, really is the hope for allowing people to be able to be more productive, and we're hoping that the kind of applications that are being put in place will be able to make a high school kid into someone as productive as a graduate student.
Yeah, I mean, I think that is the hope. A lot of companies are trying to figure out exactly how to make that happen. Last question for both of you. Expectations of a Fed cut coming up in September. We had mentioned it earlier, kind of 50-50, 25 basis points or 50 basis points. Bill, I'm going to start with you. Does that make a big difference for today's consumer, at least in the near term?
What it makes a difference is what it signals, because if it signals that there's a break in rates coming up, then there's some hope that the consumer will be able to build back some of the wealth that they have had to dip into and not have to spend more paying interest payments. And I think the trend now is that the expectation of a decline in real interest rates allows companies to also start to invest and to expand the productive enhancing investments.
Bill, before I come to Tim, I do want to ask you one question. We recently have some results from our Generation Lab poll, kind of looks at younger people, younger consumers. And so we asked them, do they count travel and experiences as a priority? They do, but then 70% of them are saying they're either just getting by or living paycheck to paycheck. Is there a disconnect there in your mind?
Oh, absolutely. When you're living paycheck to paycheck, how can you have the kind of experiences that you're hoping for without having to get a second or third job? And we're seeing that in the data. The payroll data is actually showing us that people are having to get second or third jobs in order to make ends meet. As for the younger people, making ends meet means also aspirational spending, like this kind of travel experience.
All right, Tim, I don't want to leave you hanging, but just need a very simple yes or no. Rate cut, 25, 50 basis point cut. Does that make a meaningful difference when it comes to the consumer, at least in the near term?
I think to Bill's point, it's going to help more with confidence than anything else. I don't think we're going to see the 50 that people were pricing in earlier this week. The economy's slow and it's not falling off a cliff. So I do think it'll help with confidence, but we're going to need to see a lot more to really reignite the consumer.